All right, guys, welcome back. So let's have a look at SPY, S&P 500 ETF technicals from here. So today, another positive day, another gap up day. And after hours, after closing SPY at around 403, after market close, it's at 405. So what I'm watching for tomorrow. Tomorrow we have an important data a lot of people waiting for. And also, yeah, let's just start with SPY. So SPY back above its 50-day moving average. If you take a look at this chart, on my chart, a yellow line represents 50-day moving average, red line 200-day moving average, purple is 100-day moving average. So basically SPY back above all of its major moving averages, and it might be getting a little overextended here on a very thin volume. You can see the volume has been declining while SPY was pretty much grinding higher, and that means that it's not like really people are just piling in to buy the market. It's just on a very, very thin volume. Some shorts are getting squeezed because volume has been extremely low this week, especially after all those bank headlines. It's very, very suspicious, but it's end of the quarter officially. Q1 is over tomorrow. In 10 days we're gonna have financials start reporting from, I think JP Morgan Chase is gonna start reporting first, and we'll see what's going on, but I would be very careful here because we are basically about that. If we pull up Bollinger Bands tomorrow, I would be cautious around 406.50. Basically, I have my alert at 407.50. If we're gonna get another big gap, because if you take a look at last 3 days, it wasn't just fighting through the resistance levels. It was just basically getting over resistance after market, and that's not like a actual fight, I want to say, when market is trying to push just by gapping up. That's not how you put it. Market does put a bottom, but short term, ultra short term, I would be very careful trying to chase this move, because upside potential, we still have some upside potential, 415. And also another headline today you might have heard is Nasdaq basically at back at bull markets. Basically it's 20+% move from its bottom. So I'm just mentioning it here, but we're not going to look at the Nasdaq, but we're going to take a look at overall heat map of the S&P 500 year to date. And you can see that, I'm sure a lot of you have heard of it, that basically these names are holding up S&P 500 and helping push Nasdaq 100 higher and higher. Semiconductors and all these Apple, Microsoft, Google, Meta, Amazon, Tesla, these names basically holding up the market while everything else is basically having a hard time. Maybe fintech is doing well, such as like credit card companies, but everything else is negative year to date. And for SPY, in terms of, well, let's take a look at the put to call ratio. I just wanted to put just this one away. So the last 3 days, as we were gapping up and up, put to call ratio declining. So that doesn't mean that people are not hedging, but it's something to note. And also VIX has been declining as well. So when VIX comes down to, let's say, 18 levels, basically that was the support this year, you want to be careful trying to go long market, because that's where people usually start hedging when VIX is low. And also, if you take a look at the percent of stocks in S&P 500 above their 50-day moving average, it's at the moment 37%. Only 37% of the stocks above their 50-day moving average, versus very recently, in the beginning of February, 75% of the stocks in S&P 500 were above their 50-day moving average. We were pretty much sitting at these levels, 408, 409, 410. That's the difference. So right now we have market trying to push higher, basically on tech. Financials got hit pretty hard and they're not participating. Maybe energy names are slightly helped, but basically XLE is flat as well year to date. So XLK, that's the only sector pushing the market, and that's not a good sign. You want to see broad, basically market rally if you think that it's basically rally, or if we are putting a bottom in the market long term or maybe medium term. But so far, we'll see after Q1 ends and in basically 2 weeks when banks start reporting earnings. But if you think if you're in the camp of saying that, hey, that's it, QE is back, Fed is going to cut rates, you can you can watch the Fed Watch tool. I just take a look at the FOMC Watch tool and basically keep an eye on basically for the next meeting, what's the probability of rate hike. You can see now market started pricing in another rate hike of a 0.25. So right now, pretty much yesterday, people were pricing in 60% that there's not going to be a rate hike. Right now, 50.8%. As this number increases, market can basically pull back and may not like that idea, because a lot of people already, if you just go further, let's say end of the year, people are pricing in. You want to keep an eye on all of those. Basically, yes, but it's not very high probability. So December 13, market thinks that the rate will be somewhere around 425 to 450 basis points. But these numbers have been changing and will change daily because people are betting on this. So you want to keep an eye on that as well. And so far, it does not make sense that market is, but it shouldn't even make sense. It's always like this, that the market is doing something else. But that's how you should navigate the market when everything is uncertain, when things don't make sense. You should try to pretty much control the risk. And I would not go long here blindly, because I know that internals are weak, and this market is basically holding up on those 6 names. As soon as they take break, we might get hit hard, and downside support levels, basically 50-day and 200-day. So 50-day at the moment is 400 something, and 200-day at the moment 392. So these are the levels I'm watching basically. That's for next week, and next week probably I think it's a short week, right? 4 days. We might chop around next week as well until banks start reporting. So I'm not expecting too big of a move to the downside or upside for the next week or two until we see banks start reporting. So that's the update. I hope it was helpful. Thanks for watching. See you in the next one.